Steve Sosnick here with today's Interactive Brokers Midday Market Update for Thursday, June 4th, 2020. We actually have a little bit of a decline today. We haven't seen one of those in a while. The market's advance had been somewhat relentless. Looked like we might try to trade higher on the back of the ECB, providing some more stimulus, more or less, let's call it U.S. type stimulus, which has caused the rally in the euro versus the dollar to continue. We've pretty much moved from about 110 to nearly 114. I'll call it 113 and change. Over the past 3 or 4 sessions, which is a pretty big spike for a currency of that nature. So there was a little bit of overnight profit taking, a little bit of early morning enthusiasm. Now, as we're doing this a bit before noon Eastern time, it's back to a bit more of garden variety profit taking. I'm not really going to put anything past this market, though. We've seen late day buying, we've seen new money coming in late in the day. I wouldn't be surprised if they took another shot at pushing the market higher. It's too early to call it a trend. I'm just going to call it profit taking, which leads me to really what I kind of wanted to talk about today. I recently got back in touch with a former colleague of mine, and he and I used to talk quite frequently when we worked at the same company, and then life sort of had us drift apart. We got back in touch recently. Basically, and his view of the markets right now is, I'm going to say, fairly cataclysmic, and to the point where he sees a crash coming imminently. We've had our debates respectfully, and a lot of the stuff that he worries about in terms of the market going too far too fast, pricing in too much of a rebound in the economy, the potential for another outbreak of COVID, particularly on the back of states reopening, and now you've got all sorts of unmasked people protesting in the streets. Definitely there are plenty of warning signs. There are no shortage of reasons to be cautious out there. But we've been sort of debating more about timing. He sees this happening right away, and as a long-term trader, I don't see it right now. Doesn't mean I can't change my mind in a little bit, but here's where we differ in tactics. Basically, what I want to be looking for, if I think there's going to be a turning point in the market, right now the trend has been higher. So if we were going to move lower, we would have to have something that caused a turning point. And as of now, I don't really see it. One of the things that my friend and I have been talking about is the concentration in the biggest cap NASDAQ names. This is something I've been writing about for some time and something that concerns me, quite frankly. But I don't see that trend reversing today. What I would need to see are divergences. I went back, for example, and looked at an RSI chart for February. I had this discussion with a reporter from one of the major news wires. They were talking about how RSI had ticked up, over 80 into overbought territory. The problem with RSI is it can last above 80 for some time. It pretty much lasted above 80 through most of last autumn into early winter this year. And actually, one of the tells was, as we pushed to new highs on SPX in early to mid February, RSI did not follow. So that would have been more of a tell. That's a divergence, and what I want to see before I'm ready to make a call that a trend is turning is some sort of divergence, some sort of backing, some sort of consolidation, for starters. The thought I had here is I'm going to date myself here, but for those of you who are fans of 70s television, there was a show called Sanford and Son, and basically every so often when things would not go his way, Fred Sanford, the title character, would clutch his chest and say, it's the big one. It's the big one. It's usually to get attention. And so, I don't want to accuse my friend of being Fred Sanford, but I want to see some evidence if we are at a turning point what I do want to see, what I also don't want to be is hysterical, because I think ultimately, you know, if you say something enough times, it's the boy who cried wolf problem. And so, now, that said, if you are concerned about many of these divergences between the stock market and the economy, which is a different type of divergence than a trading divergence. A trading divergence is, one index goes up and the other goes down, or certain technical indicators fail to corroborate the moves you're seeing, which we're not really quite there yet. But the divergences in the economy, I do find worrisome. I do find the tight leadership to be somewhat worrisome. Although, to be fair, it's broadened out a bit. I do think that we've more or less priced in a V-shaped bottom. I do think that we've while we don't have corporate buybacks anymore, which were the marginal buyer in the market, I do think we've replaced buybacks with retail investors, and ultimately, that's a good thing. Overall, we want to see people participating, but not if they're going to need that money in the short term, because that would ultimately, prove to be a transient flow of money into the markets. So, sort of in response to my friend who's calling for it, the big one, I want to wait and see before I really make the call to say that the market has turned. Again, if you're worried, it's never a bad thing to raise liquidity. No one ever went broke taking a profit, but I'm looking for either a catalyst, which I haven't seen yet, to turn the market, or the sort of technical type of indicators that could do so. Talk to you tomorrow. We'll probably expand on this theme then. Take care. Bye-bye.